our panel. Next we have Thomas Ross. He's a loan officer at Origin Point. Okay, next question is for Thomas. Okay, Thomas, what are you seeing in the interest rate market currently, and what can clients take advantage of right now to help with the rate?
Sure, it's probably the most common question that I get every single day. Just for kind of laying the ground rules of where we are right now, 30-year conventional right now with no points is right around 7% for a qualified client, okay? Now, there are obviously strategies to get below that, and very rarely are we closing loans with a 7 in front of them these days. First and foremost is the tried and true buy downs paid by the seller. We are still seeing those. However, we've seen quite a bit of competitive listings in the last few weeks, so those have slowed down. The other thing that a lot of clients have taken advantage of in the last 2 weeks are ARMs. So adjustable rate mortgages. I know they have a taboo because of how they were set up 2008 and before, but the ARMs that we have now are not the same. We generally sell 7 or 10-year ARMs, and that means that those rates are fixed for the first 7 to 10 years, depending on which ARM we choose. Majority of people only keep a loan for 5 to 7 years in Texas anyway, so the chance that their loan ever adjusts is minimal to none. That being said, what's the spread, right? What's the benefit of this? Well, they're particularly sensitive to paying points, and with paying about 1 discount point, we're seeing as much as a 0.5% spread between that and the 30-year fixed. So I know Jessica and I this past week have probably locked 6 or 7 7-year ARMs. That's both for conventional conforming and jumbos. Super, super effective right now. And a topic we'll breach with your clients kind of early in the conversation because of how effective it is at lowering the payment.
Okay. What can you do as lenders to help buyers in the competitive spring market?
Yeah, so like I mentioned earlier, we're starting to see a lot of multi-offer situations. Jess and I actually had buyers go against each other the other day. Mine won out. Shout out. But yeah, so there are a few things as lenders that we can help with for your buyer's competitiveness. It all comes down to terms in the contract, right? And your contingencies. How can we help with those apart from just increasing purchase price, the most obvious one, right? So when we're talking about that financing contingency, let's explore, if you know it's going to be a competitive situation for your client, getting them underwritten up front with our power bid pre-approval. That can be as fast as a 24-hour turn time. They're immediately credit approved through that, so you can waive that financing contingency completely. If you're going against an offer with financing contingency, that makes you stand out a whole lot more, right? Fast closes is another thing Origin Point's really good at. 10, 11, 12-day closes are really no issue for us. So if you need to move fast, and that is a motivation for the seller, let's get you set up as such. And then finally, I think a big thing in competitive situations, you're never going to accept an offer with a sale contingency, right? Contingent on sale of prior home. And we do have 3 different programs we can use to help eliminate that in terms of our qualification and turn what would usually be a contingent buyer into a non-contingent buyer. So those are kind of the 3 big points that we help with.
I know you guys work with a lot of self-employed clients. With it being tax season right now, what are the best tips you could give potential buyers?
Talk to us first. If anyone has self-employed clients, whether yourself or a client, and they're planning on buying in the next 12 months, I highly recommend they talk to a lender before they ever file their taxes, because they could be shooting themselves in the foot before they're even ready to make an offer, right? It could be this fall, this winter, and they messed up this February in order to get their approval, right? We do have solutions for people that don't qualify based on normal tax returns, bank statement loans, profit and loss loans, 1099 loans, great for agents, which we'll sometimes use. However, you're always going to get the best terms for your mortgage if you go the traditional route, right? Because it's less risky as a lender to do it that way. So if you can have their CPA make a draft tax return, let us get our eyes on that first and make sure it kind of fits the mold for their qualifying. And then we'll have them file it and get the approval done afterwards.
Thomas, you said something about how you guys have 3 different programs that you can help somebody write without being contingent on the sale of their home. Mm-hmm. Can you give us an example of one and what the high points of it are?
Yeah, I can give you all 3 real quick if you'd like. So on one of them, all I need from you guys is a letter from your seller, or buyer in this case, saying they intend to list their home within 3 months of closing on the new home, at which point I no longer have to count the old home. There are higher reserve requirements, so it's mostly for a client that has more assets.
What would that be? Is it a year?
It's 24 months reserves of payments. That being said, we can still access equity on the prior home. We would just use a HELOC on it to take that money out and put as a down payment towards the new house. That HELOC also doesn't count against them. We've got another program where I can count expected rent from the prior residence without having a lease. I just have to get an appraiser to give me a rent schedule on the old home. So just market rent, and I can assume that they're going to get it. I don't have to see that they've actually rented the property or not. And then I have a third where the property does have to be listed for me to not include it. However, we got confirmation that Compass Private Exclusive counts as it being listed. So as long as your buyer is willing to put their home on Private Exclusive, they don't have to be showing it. I can discount it from their qualification, and then they can go non-contingent. Yeah.
What's the rate versus standard for that?
Yeah, good question. So that last one is super similar to normal jumbos. Sorry, the question was, is there a rate difference for these programs? Very minimal. The first one the first one with just the letter of intent is a little bit higher. The other two are very similar to market. Now there is going to be some sort of premium. I'm talking like 1/8 to 1/4 in rate. So not really the difference maker.
Okay, next question.
One follow-up question, Thomas, for what you said about the rent schedule. How much of the rent are they going to use in that rent schedule? Is 75%, 100%?
Correct. Yeah, it's 75%.
Right.
Yes, ma'am.
Thank you.
I've got a question from one of the lenders, from the lender. So in paragraph 12.1 or 12A.1b, where we can add the buyer's commission. So if the seller is not going to pay, let's say the seller agrees to pay 2% and the buyer has to pick up a tab for 1%, and they get the seller to agree to incorporate that 1% into the contract, how are the lenders dealing with that from a, similar to, what are you allowing for that? Does it come into play as far as their qualifications and whatnot?
Yeah, so if I'm understanding correctly, you're asking whether it's counting against their seller credit limits, their IPCs, interested party contributions. It is not. So any concessions agreed upon in the contract are not being included. At least this is Origin Point's standpoint. I can't speak for any other lenders you're working with because it's not mandated from the top down yet. Those are not being included in any kind of seller credit limits. So if you win yourself 3% from the seller there, and then you also want to ask for max concessions in the box below that, you can totally do both.
I had a lender tell me that they're starting to have to see buyer's rep agreements. Can you speak to that relative to the commission, the contract not matching what's on the buyer's rep?
Right, so we do have to have buyer's reps as well. Our underwriters are requesting those now just to make sure there aren't any costs that we're not taking into account in our approval. Because if there are costs, additional costs for your commission coming from the buyer, then we need to source sufficient assets to cover those. So that's correct. Sometimes you will be asked. If it's very clearly stated and I see the addendum broker to broker payment, then we're not going to need your buyer's rep necessarily.